Now it's time for the checkoff process. So what we're going to do is we're going to look at our bank statement, at all the transactions listed on that statement, and we're going to check it against our cash book. What we're doing is identifying what we have. So therefore, what amount we see on our bank statement, we're checking to see if it is in the cash book. And if it is not, then we would know that the missing items that we've identified on the bank statement that are not in the cash book, we will be using those items to update the cash book. In the same breath, with any unchecked items that are in the cash book, those items will be used to update our reconciliation report. So let's see what that would look like. Now remember, we are supposed to complete an opening reconciliation because our beginning balance in the cash book of $14.95 differs from the beginning balance on the bank statement, which is $16.12. So we need to identify the items we're going to use in our opening reconciliation to make those two balances match. After that, we will then be able to see what we have left and what will be used in the cash book update and the reconciliation report. Okay. So on the 1st of November, on our bank statement, we see that there's a deposit of $300 on the credit side of the bank statement. Now remember, bank statement is different to how we view it from the cash book, whereas credit in the bank statement, it is income, while income in the cash book would be reported on the debit side. Same thing for expenses. Money going out of your cash book would be on the credit side of the cash book, but you will find it on the debit side of your bank statement. So just keep that in mind when we're reviewing these transactions on the bank statement in the debit and credit columns. Now, the $300 we see here on the credit side of the bank statement would have been an unrecorded deposit in the prior period. So because we are trying to make sure that the beginning balance in the cash book and the bank statement balance, we'd have to use this amount to deduct from our cash book balance when we're doing our open reconciliation. So we've identified the first transaction that is required in our opening reconciliation. So I'll go ahead and just write OR next to that so that I can remember to use that in my opening reconciliation. Okay, the next transaction is check 718 for $218. Let's look at our cash book to see if we see it there. And yes, we do. Here are mirrors. Check 718 for $218. There's nothing wrong with the amount, so we can go ahead and we can cross that amount off of our cash book and cross it off from our bank statement. Check 713. Do we have a check 713 in our cash book? We have it here on the bank statement, but we do not see it here in the cash book. Now, if you're lucky enough to get a cash book which gives your checks in numerical order, great, because then you can easily identify any transaction required for the opening reconciliation. This is because you would observe what is the oldest check number. In this case, in the cash book, it is 718. So any number that comes before 718 would be a check that you would use in your opening reconciliation. So as we have check 713, which cleared the bank in November, that check is older than 718, so we will be using that in our opening reconciliation. So we can just write OR right next to that, and we're good to go. So the next transaction is a deposit for $312 on our bank statement. Do we have it here in the cash book? Yes, we do. So we can go ahead and cross it from our cash book and come and cross it off our bank statement. We already know that we have to deal with this adjustment, so we can skip that because that was in our notes from the prior video. Let's look at check 721 for $737 on our bank statement. Do we have that in our cash book? Let's see, we do. It's here, so let's just cross that off from our cash book. and come back on our statement and we cross it off here as well. Now there's a standing order for 140. It's in the debit column, so it's an expense on the bank statement. So our cash book on the credit side does not show this 140. So this is an item that we would include in our updated cash book. So we are not going to check it off. We're just going to leave it there because when we're finished, any items not checked off on our bank statement would be the items we're using in our updated cash book. So we leave that one as is because we have to use it in the updated cash book. Or you can write CB next to it if you want. If that helps you remember, you just write CB so you know to use it in your cash book. Next one is check 722 for 132. Let's see if that's on the credit side of our cash book, and it is. So you cross it off from your cash book and your bank statement. Check 720 is next for $75. We do have that in our cash book on the correct side. So we cross it off of our cash book and our bank statement. Our next transaction is a deposit for $551. So let's check the debit side because this is income of our cash book and see if we find that. We don't see that deposit, that number straight off the bat, but we can't just simply assume it is for the opening reconciliation. We can look at a couple of transactions to see if they do total up to the 551. So we have $222 here and we have $329 following that. So let's total those two numbers and see what we get. 222 plus so that's 329. And yes, we do get the 551. So this is an example of merged deposits where we have multiple income transactions in our cash book that was deposited at some point together to give us this total amount here that we see on our bank statement. So I'll repeat that one more time. Even though you come across a deposit, before you decide if it should go into your opening reconciliation or not, you can check the cash book to see if you have a combination of income transactions that total that deposit. If it does not, then because it is a deposit, you can assume that it is for the opening reconciliation, because any deposits that we see on our bank statement that is not reported in our cash book for the period that we're reconciling would have to be used in our opening reconciliation. Again, it's only deposits and unpresented checks that we are looking for right now to update our opening reconciliation. So moving on, let's cross off that 551 and from the statement and the 222 and 329 from our cash book, because those two total that amount. The next transaction is check 724 for $284. We do have that in our cash book, so we can cross it off our bank statement. Then we have check 920. I believe we do have a note on this. Just scroll back down to our notes quickly. Right here it is, check 920. This is a bank error that we have to use in our bank reconciliation. So you can just write BR to remind you that you're going to use it in your bank reconciliation. Next one, a deposit for $512. Do we have that in our cash book? Yes, we do. It's right here on the debit side. So we can cross it off, both reports. Now we have check 725 for $343. Yes, we have that on our bank statement and in our cash book. The non-sufficient funds amount, we came across a note on that earlier, so we know that that is for our cash book. So you can write cash book next to that. Then we have a $472 deposit. Do we see that in our cash book? Yes, we do. D-Cossi on the debit side. So we can cross that off the bank statement and from the cash book. And then we have SC, which stands for service charge. That's on the debit side. So we have to check the credit side of the cash book. We do not see that service charge in our cash book. So you can write CB next to that. So you know you have to update your cash book. And finally, we had a note for this credit memorandum. It was told to us that it was for dividends. So we have to use that to update our cash book because that dividend amount is not seen in our cash book. So we can write CB next to that. So we'll pause here and continue with the next step in the next video.